Hello everybody, this is Fabi from The Next Big Rush, and this is the face of somebody who has just been completely destroyed in the markets, in the resource sector. Wow, what a day. So many stocks are down today. There is so much red just all across the sector. I mean, you have a few companies that are doing well, that are holding up quite nicely, but in general, there is just so much pain in the sector right now. There's so much red, no bids to a certain extent on a few stocks. And so we have to just take a breather and think, depending on what your general portfolio is doing right now. Okay, so this is just like super unlucky. I've had a conversation with Jay, the firefighter, a guy who's pretty much my age. I think he's exactly my age, super successful, retired already, and he is a very prolific investor. And he's also on CEO.ca, so shout out to Jay. And the discussion was around what's better, to invest in people, right, as your main reason, or to invest in projects as your main reason. And it turns out that I said I sort of lean towards the people, and he leans towards the project. And we are both right to a certain extent, and on the two sides of that bet was pretty much Birimian, I think that's how you pronounce it. I'm sorry if I'm just like destroying. Or is it Birimian? Anyway, and Anfield Gold. Now, both of these stocks have collapsed, basically, for lack of a better word. They're in the crapper. And it turns out that although we both had our point, both stocks are suffering a lot. With his bet, it is a people problem. And with my company, it is a project-related problem. So it's funny how you can be right and be wrong and still lose money on your thesis. Anyway, so Anfield Gold, like I said, and I've just put this out, I bought more of it. I've lowered my cost base, but there was very little point to that, because for the last 2 days, they came out with a new resource estimate, which I'm not sure if it makes their one project, the Coringa project, viable at all. So they're sitting on a lot of cash, a lot of great people, crappy project. They didn't know it was crappy, but now they do. And maybe I shouldn't say Coringa. The real pronunciation is Coringa. And yeah, like this came out, the whole sector is already down. Now, obviously, everybody becomes just more and more logical when the market's down. They start looking at market cap, wink wink, should have looked at that first. They start looking at NPVs, wink wink, should have looked at that first. And now they're saying, oh no, this is still expensive at what, 50% down from the levels I bought it. And so here's what I'm thinking, okay? I bought this company for the long-term acquisitions that they would be doing, right? I didn't buy this company for this one Coringa project, which I didn't really care about in the first place. If I thought it was a good buy at double the price, is it still a good buy at half the price? And I don't know the answer to that. Well, what I plan to do right now with Anfield Gold is to wait until management comes out and says, okay, with our remaining cash, this is what we intend to do. Or just to get news flow of new acquisitions, because that is the whole point of me buying Anfield Gold. If they come out with good projects to buy, I might hold it, or even buy more, which sounds like complete suicide, but I'm willing to buy more if the projects make sense, because that's the whole point of buying Anfield Gold. Now, the only thing, or the other thing that could happen is that Lumina Gold and Anfield Gold, I don't know what if they merge, right? I mean, they're sort of two different ways of reaching the same goal. Just one of them is high grade and the other one is bigger projects. Or I might just sell it and buy Lumina Gold if management doesn't come up with a good solution for the problem that they have right now. If there isn't really a clear path on how the company will still be worth more and more and more in the future, then I might just sell it and buy Lumina Gold instead, because Lumina Gold hasn't collapsed in the same way as Anfield Gold. Now, obviously, because the whole sector is down, I think that things will be amplified and that stocks in general in the sector might go down more than they would have been if the market was trading sideways or up. That's just obvious in human nature. But yeah, like, man, you can lose so much money in the sector if the timing is not right. I mean, let's think about it. They still have more than $20 million in their treasury. If the stock goes down a little bit more and they make good acquisitions, blah, 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 and if things go right in the long term, people who are coming in and buying Anfield now, they can make a killing. I mean, to get a 10 bagger would be not really impossible. But then it's what do you do with the money? And that's when good management comes in. Now, if I had bought a company for the project and this happened, then I would have to be out of it. You know, there'd be no reason to really hold on to something like this. So, like, huge tragedy. My head is just reeling. But, you know, this is the game that we play, and I want to actually come out in the defense of companies which are, this is gonna be a super long video, but I don't care. This needs to be said right now, and because the market is crap, I feel like this must be said now. Your timing is more important than almost anything. Your timing is probably more important than the companies that you freaking buy. Let me tell you why. You know what my biggest gain, like realized gain, has been? I'm gonna let you take a guess. I know a lot of you have seen my portfolios from March. And what do you think, out of all those great companies, some not so great, which one has been my biggest realized gain? Well, biggest realized gain by proportion in my portfolio, my biggest chunk of cash. First Mining Finance. Now, every time you say First Mining Finance, Brazil Resources, and some other companies in this business, people turn to like their high school thinking of, these are the popular kids, these are, you know, like the nerd kids, these are the unpopular kids, and they would put those two companies and others in the unpopular category. Why? First of all, they're really heavily promoted. I get it. I don't see that as a minus. I think that's a plus because they'll keep promoting them, and when I want to get out, I know that there will be liquidity for those stocks. The other thing is that, well, they're not economic at these levels, so those projects will never get built. I don't know about that, but there is usually very little bad news flow when a company just buys a bunch of projects that are not economical and just sits on them. Like, let's think about it. During this whole period of big sell-offs, there is probably not going to be any negative news release coming out of a company like Brazil Resources. Sorry, Gold Mining Inc. I should be updating my little things now. Gold Mining Inc. Because they just acquire projects and acquire projects and acquire projects. So the news flow is usually positive, right? I mean, when you're buying a company that's, exploring either to advance the project because they want to find more gold, or they're just starting to look for gold and they need something that's, you know, PEA worthy at least, a lot of things can go bad. A lot of things can go bad. So please don't listen to people who knock companies just because they are not like geologically worthy of like Hall of Fame. Okay? You can still make a lot of money. The reason why I've made so much money in First Mining Finance, and it was one of my best purchases ever, is because I got it for dirt cheap. I bought it when it was so low that there is literally almost no way that I can lose money. So pay attention to your timing. And what this means is that in a day like today, when it's all red, when people hate the sector, when people are scared, they don't want to look at their portfolios, when you go on CEO.ca and people are not commenting anything good at all, and when there are not that many people looking at your specific company, as you can see there on the chat count, that's when it's time to buy. I'm really lucky. I tried to buy a few things, but my orders didn't get filled, so I'm still sitting on some cash, which is good right now. But this is it. This is going back to my First Mining Finance success. I can only, like, this is my one skill. I'm not really that smart, okay? I'll get that out there. I am willing to buy when nobody else is willing to buy. And that's how I've made so much money in that one stock and a few other stocks. So I'm out shopping. You know, it seems counterintuitive, but I am out shopping. I know that I will have access to a little bit more cash, hopefully during the summer. So this is, I could be very wrong. Don't do what I'm doing unless you know that in your DNA, that is where your strength lies. If you want to time the market, be my guest. I'm just so slow at noticing that the market is going back up that I lose a lot of the upside, and then I get scared of buying when it's already gone up so much, and I wait longer, and then the stock will go up higher and higher, and then I just can't get the timing right. There may be a time when I have a portfolio that's, you know, me tinkering, trying to time the market better. Maybe I'll use moving averages, which I have done before, which is a little bit of basic technical analysis. But for now, this is what has worked for me, and I'll keep doing it. When you're selling, when everybody's selling, when there's just a wall of red, that's when I'm buying. So that's it. Tough day. I feel just like mentally exhausted today, but mark this video and check back in, like, I don't know, a year, maybe 2 years. I have a very long horizon. Thank you very much. If you hit like and subscribe, you'll see what happens next and what I decide to do about my Anfield Gold position.